What's up, everybody? Good morning. Welcome aboard to Trading with Bubba. And there's not much to trade. As we watch these markets, you had a huge up day yesterday, a down day today, which is perfectly natural after the markets have rallied so far. You would expect to see a natural pullback. This is not unhealthy. It is actually healthy for the market if it's going to go higher. If it's the start of the break, I would think you'd see a rally first before a break. Overall, it's really quiet and really slow, and it's a great time to really kind of relax. But if you look at the charts, here's the cues. So when you're looking here, you're seeing it at a resistance level. You're seeing a market that has gone basically parabolic higher. Do you want to chase it up here? That's the logic you have to put behind it. The charts support the things we're talking about. It doesn't mean we won't go higher. It doesn't mean we can't go higher. But the odds is that we're either going to go sideways or come down a little bit before. So if I were looking here, I'd be looking to sell some call spreads, which I've done. I did it yesterday, as I said on yesterday's update. And they're coming in right now. Now, whether they'll cash that, I can't answer right now. But the logical position in the Qs, you have a resistance, a little bit of a pullback most likely. And the SPYs, the same thing. The SPYs reached resistance, failed, and are coming down. So what I'd be looking for is a pullback to 450. All right, if it comes back, great, and then I'll maybe sell some put spreads there. Again, here you want to use the market opportunities that it's creating to give you the best probability or the highest odds of success. We know that the market should not break out from here. Not that it won't break out in 3 or 4 days from now, but the most healthy or the best action for the market coming forward would be some sideways trade. And you can see this in a lot of the stuff we watch. Apple looks like it's found a little bit of resistance around 192. And again, that doesn't, just because we might sell call spreads for a short period of time, does not make us bearish the market, does not make us say it can't go higher. What we're saying is that the market should see potentially some pullback or some hold before moving further. I mean, again, this is pretty much across the board. Amazon, the same thing. It's now getting into a consolidation pattern. Coin is still spiking higher, but it looks like it's kind of slowed down a little bit here. Meta, again, broke out. So now you've got a reason to buy at 330 and maybe a reason to sell a little bit at 340. Again, we know that the natural reaction to markets should be, let's say, if we're rallying, up 2 steps, back 1. If it's selling off, down 2 steps, back 1. So that's the kind of atmosphere you want to look for in these markets, is where does it give you the highest probability to be successful. So you see that we're trending higher, but we can see that some little bit of a pullback. And again, you look at Google, broke out, and again, we're having trouble penetrating, okay, as it really just sits in a wider consolidation pattern. IWM, consolidation pattern, okay. Microsoft, consolidation pattern. So you're starting to see this more consistently throughout the marketplace. And what does it mean? Look, again, the market, the trend is definitely higher, okay. We're not going to argue with the trend. No matter what your opinion is, no matter what you think, the trend right now is higher, okay. The economy doesn't support it, a higher trend. Nothing in the marketplace supports the market action except for the market itself. And if we remember that the market is always right, okay, because at the end of the day, the market is an inanimate object. So if we always remember that the market is always right, then all we have to do is try to figure our way and weave with the market to when it finds support or resistance levels to either, buy calls, buy puts. But in these environments, I think it's always better to start off selling premium. Okay. I think it's always better to sell spreads. I'm not a naked option seller. I'm a spread seller. Okay. Trying to create and generate some income and some revenue while I'm waiting for the next big move. Now, we have been long, as my group has been long in this market's the entire ride up here. But that's not the point. The point is that how do we take advantage of the ebbs and flows and the different points or places the markets come to? So when you go back and you look at these charts and you go, okay, so I look at NVIDIA. Well, NVIDIA's got earnings today. So I'm not doing anything with in NVIDIA today because they got earnings. So I'm not going to get involved in this. I mean, certainly based on the recent price action, I'm going to assume the earnings are going to be good, but they might have already been priced in. The Qs, notice we're again failing, and that failing is not the right word. We're slowing down here, which makes sense because of what the markets do. We know that the parabolic moves, a true market should work at about a 45-degree angle. That's a solid trend, either up or down. We know that when they go 90 degrees, it's probably going to see either consolidation or a pullback. And again, we can look at just about anywhere else. You can see square, looks like it's reached its pinnacle. Okay, for now. Again, that doesn't mean that it's not going to go up tomorrow or the next few days, or that the trend has been violated. All it means is that we could slow down. And because of the short-term duration we have in the options world, on the spiders and Qs, you got dailies. So you can actually pinpoint to the day of selling premium. And that's what you're trying to use all the tools in the marketplace and all the charts and all the different option strategies that go along with the time frame. So any of these that have weekly options, you don't have to commit for 3 months out. You can commit for a week. You can commit for 3 days. All right. Now this week we've only got today, tomorrow, and Fridays left in the week because there's nothing Thursday. So the volatility has already been accommodated for that. We already know that that's already been taken care of. But again, you know that every trade you make is not going to be a winner. You know that all you're trying to do is find where you can grab an edge, where you can find a little bit of a market inefficiency. Okay, and listen, the markets are pretty damn efficient, but there's always those spots, especially when you're using the spread market, because you don't have to expose yourself or take dramatic risk. Okay, all you're doing is, you're taking some minor risk, okay, to get some minor profit. Okay, and your profit you should always be, when you're trying to sell premium, your goal should be to collect 40% or 40 cents per dollar of premium you're going to sell, because you know that some of them are going to blow up in your face, but you only need 1.5 times to get it back if you happen to be wrong. Okay, so again, we want to make sure that we stay partially in the game. Okay, and if you said to me, hey, I don't want to work the rest of this week because there's really not that much to do, I would say congratulations, you've graduated, because there are times when it's time just to observe the markets. All traders have a tendency to see a mirage in the market, right? We see what we want to see because we have an opinion. Okay, that is wrong. And the slower the trade, the slower the markets are, the more people and traders generate a false opinion because they've heard on the news or they've read something in the Wall Street Journal or Barron's or whatever it is that says it should do this. Now, nobody knows for sure what is next. So your job is to find opportunity. And sometimes there's a lot less opportunity. Remember, the more trades that we can make if we're trading properly, the more money we're going to make, the more losing trades we will have. But again, it's about opportunity. It's about the event, right? And so, again, if I can trade 100 times a day, I'm going to have a pretty good day, okay, if I'm doing everything properly. Versus if I trade once in a day, 50-50. I might be right, I might be wrong. And I can't really bank it on, because everything we do is based on the law of large numbers as well. And I think that's something that too many of us forget, that we're playing a straight probability model. We're trading and playing what the charts are telling us. And again, so far, every chart I've showed you says to me that we've reached resistance. Tesla, roll the resistance. Win in the middle of nowhere. So I wouldn't even have a trade. And again, it doesn't really matter, okay, where you're looking, because again, if we look at the futures market, you will see a lot of the same activity, okay? Beautiful little trend in the bond market, okay? So if it rallies up to, let's say 118, I'd look to be a potential seller for a short-term trade. these are things here. Here's gold up against resistance. So again, it doesn't really matter what the product is. It doesn't matter what the chart is, because all markets are the same. All charts repeat themselves over and over, whether or not you're looking at a 4-minute chart. Here's a bunch of 4-minute charts. And again, it doesn't matter what they are, because at the end of the day, they're all going to end up trading the same way. Okay. Or a 1-minute chart. Okay. Those are, maybe if it came through, did I freeze out? There we go. Okay. So here's a 1-minute chart. Again, they look the same. Okay. Because what happens is the shorter time frame has to dictate what is going next, which is why I use, if I'm day trading, first of all, I'm trading in the futures market. Okay. Because again, it's a better tax advantage, and it's a cleaner market, less bid offer spreads to give up, and so on and so forth. But the chart themselves are always going to be the same. Okay. And here is, a typical action in for example, like in crude, right? I would be looking to be, and maybe I'll make a trade here while we're here together. Okay. I don't have a problem with that. You know me, I make trades with you all the time if you're around. Again, I'm not telling you should do that, but again, this setup that I'm looking for, this is a blow off on heavier than normal volume. And this is going to be the biggest volume bar in the last hour. Okay, so maybe I'll take a look at it, and we'll take a look. We'll see what happens. Okay. All right, so I'm going to go flip over to my next chart. Okay, so now I'm taking from the 4-minute says I should look to potentially be a buyer. Okay, I can already establish that my stop right now is going to be, in January crude oil, is going to be 76.75. Okay, 76.75 is going to be my stop. The question is, do I get an entry here? So I got to wait till the bar completes. Okay, it has to be green. Okay, like right here, it's not green. Here is, I'll say to you that if it's 77.38 or higher, I'm going to be a buyer, because I'm going to assume that I'm going to get that bounce. Okay, off of that over the sold market. Okay, so I got to wait though. Again, we're back at 37. So again, you have to let the bar complete itself before making the trade. Okay. And right now, no trade. And it's no trade now. So, but I'm still looking for an opportunity, but I have to be convinced, okay, that the chart is telling me that it has turned the corner and found that level. Okay. And I have not seen that yet. So I have to continue to wait and watch. Okay. And these are the things that you're looking at. Okay, as we look at markets, and again, we just go back. This is what I use basically almost all during the day. Okay, and there's nothing else really happening because volume is drying up, but I still have the opportunity to look at the crude market, and now crude's starting to give up the ghost. So you know what? To me, it doesn't look like it wants to run. What we're really looking for in that pattern is we're looking for a quick reversal. Okay, it doesn't look like it's come. So I'm going to go ahead and pass that trade, and we're going to move on. Because again, as I tell you, some days there just isn't that much to do. And I think that you have to learn as a trader, as an investor, that every day we can't trade. Every day is not going to be a great day. Okay. What you have to realize is, where is my advantage? Where can I comfortably put in an entry? Which also gives me, where can I comfortably put in an exit? Because the one thing you must make sure you always know, okay, it's easy to make money, but when you lose less than you should lose, or when you lose less because you're properly operating, that's what you're looking for. Okay, we know we have to put stops in. Okay, which is why when I'm day trading futures, I don't have to worry about it. That's why I don't day trade options. Every options trade I make is set up that has its own built-in stop, so I don't have to get up. But when I'm trading futures, I have to exit. I have to know my exit plan. And that is based off of the ATR, the average true range. There's a lot of factors, which one day we'll go over them all. But what you have to remember is protection. You got to protect yourself. Okay. You got to protect your capital, because at the end of the day, your capital, your money, is your inventory. And if you run out of inventory, you're out of business. Okay. So we have to make sure that we're in business, that we're ready to operate in business. Okay. And again, we see a very, very slow market. Look at these volumes. Okay, as we look back to the bigger picture. Okay. So we go back to the spider. Oops, I didn't want to do that. Hold on one second. I got to put my other my other chart back in here. Hold on 1 second before I screw everything up. Okay, there we go. So if I go back to the spider, okay, look at this volume. It's barely registering. And when we just opened, you're barely seeing any volume. Look at the Qs. No volume. Okay. So all the major indices, the ones that trade the most, there's no activity. So why do I want to get involved? Okay. You have to ask yourself the very important question is, why do I want to get involved? Okay. Is it worth my money, my risk, and my time to get involved in a market that is so quiet and so slow? I think the answer is no. That would be what I would be doing. In fact, again, we're getting prepared for the holidays. There's a lot of things to do. So why should I expose myself and put myself at risk right now in a market that is extremely quiet? And I don't care if you think you know where it's going. Nobody knows where we're going for sure, especially when you get into these holiday markets. Okay. And holiday trade, remember, is a little bit different than normal trade because markets, believe it or not, when they're slower, can extend in either direction much further than you think because there's no order flow, there's no paper, there's nobody on the other side of the market many of the times. So you'll see these big moves in one direction or the other out of nowhere on light volume. But again, when there's nobody in place to stop it, okay, it creates that problem. So it is my suggestion, it is my recommendation. Certainly, if you want to study the market, it's always a good thing to do to kind of prepare yourself for the future. But it is my advice to all of you that unless you get what we would call a no-brainer trade, which would mean something totally out of the ordinary, which I do not expect, I am not going to sit here all day waiting for the possibility that might exist. Okay. I look at trades, again, I want to look at trades in volume where I'm going to have more opportunities or many opportunities. I don't think that I'll get an opportunity. So to me, it's not worth wasting your time on a day like today or tomorrow or probably Friday. Okay. I think you wait until Monday, you go back to work. In fact, my day trading group that we day trade futures every morning, we suspended trade until Monday the 27th. That is my recommendation to all of you. Again, study if you want to watch the markets, but if you want to get active here, it is not a wise plan. It can only cause grief, okay? Because again, there isn't enough activity in these markets, okay? Again, I'm not telling you not to sell spreads. I'm not telling you not to try to sell some premium, pick some spots, but to be active here is not very good. And to all of you, I will see you next week because, of course, Thursday is Thanksgiving. So happy Thanksgiving. Thanks always for your time. And we'll see you back here tomorrow with the update, but for the full show next Tuesday. Have a great Thanksgiving, everybody. Thanks as always, and I'll see you later.